Health insurance presents a three-part discussion on understanding how to select a health insurance plan. Please note, this is not the definitive how-to on selecting a health insurance plan, but merely a guide and educational discussion on understanding health insurance on a basic level. Part 3 of understanding how to select a health insurance plan. Plan types. A plan type or design is how the plan functions. The plan type will dictate what is covered and how much is covered. It will also indicate how much the member is responsible for. Some common definitions that are used in plan types are PCP, your primary care physician. Who do you go to when you get a cold? Copay, a fixed amount the member pays for services. Coinsurance, a percentage of the cost the member must pay. Annual out-of-pocket limit. This is the max amount in a given contract year that you would have to pay, which includes all copays and or coinsurance. Annual deductible. The amount a member must first pay before benefits typically kick in. The first plan type we will talk about is the high deductible plan, normally also called HSA compatible plans. A high deductible plan is where the member must meet a deductible before any benefits kick in. Common deductibles are $1,500, $2,000, and $2,500. One thing to note about a high deductible plan is that the deductible is doubled for any coverage other than individual. So, for example, if you have a family, your deductible is going to be $3,000 if you have a $1,500 deductible. If you are married with no kids, it will still be $3,000. Some features of the high deductible is that the member pays a higher deductible in exchange for lower monthly premiums. The idea is that the money you save in premiums, you put away to meet the deductible for when the time comes. High deductibles ask the member to consider if they really need to go seek medical services. This plan is also called a consumer-directed health plan because the consumer is more likely to choose when or when not to seek medical treatment. High deductible plans may prevent members from using services because of two main reasons. First, typically, individuals do not save the difference in premium savings to put towards the deductible and no longer have the money to pay for the services when the time comes. Second, the member does not know what it really costs to go to the doctors. And now that the member is responsible for 100% of the cost, they may or may not go. The next feature holds true for every plan type we will discuss, and it's important we spend some time to understand how this works. Let's take two simple examples to compare with. When you go to the store to buy a gallon of milk, you can see the price and choose to buy or not buy. We can call this a known price. The second example is if your car breaks. When you take it to the mechanic, you don't know what's wrong with it, and neither does the mechanic. The mechanic quotes you a diagnostic fee, and then he will report the estimate for the items that need to be fixed. We can call this a known estimate. In health insurance, fees do not work like either example, and that is where health insurance can become frustrating. A high deductible plan, just like all plans, offer the member cost savings for medical services used. In-network doctors contract with health insurance companies and agree to take reduced fees for services provided. For example, if the doctor normally charges $100 for a physical, he may only charge $50 through the insurance company. The problem is the member does not know what those contracted rates are, and it's almost impossible to find out. Members do not know what the price is, as with our example with the milk, and the estimate example with the mechanic doesn't apply either. Essentially, the member never knows what the fee is until services have been rendered and then routed through the health insurance company. With a high deductible plan, when you go to the doctor, you are essentially opening your wallet and leaving it open. The final feature with a high deductible plan is that it allows the member to take money and deposit money into a health savings account. This money is earmarked for medical services and certain medical supplies. This makes the plan appealing if tax savings is a main concern. High deductible plans are good plans depending on your situation. Some people use them as their main health insurance plan and do not mind paying the deductibles. Other people use the high deductible plan as a cheap catastrophic plan to provide coverage for major medical emergencies. Copay plans. Copay plans were the traditional plans that people were used to using. They are simple to understand. You go to the doctors, you pay a fixed amount, and there's nothing else for you to pay. Most plans have copays for your PCP, specialist, and hospital visits. Some features of a copay plan are higher premiums in exchange for low medical service cost. This is one of the reasons why the high deductible plan came into existence, the higher premiums. Copay plans are very simple to understand and use. The deductibles are extremely low or they're none at all. Copay plans can be purchased in a PPO or HMO network. Hybrid plans. Hybrid plans are becoming the new normal in health insurance. They combine the use of a high deductible plan and a copay plan, providing the member with a health insurance policy that is actively used and affordable. Hybrid plans normally have a copay for common services such as PCP visits or a specialist visit. They utilize a high deductible for all other services such as a hospital visits. So if you get sick, no problem. You go to the doctor and pay the copay and you're good to go. Hybrid plans also provide a component which allows the member to go out of network. A hybrid plan is also called a POS plan because of this feature. If a member goes out of network, normally services are subject to the deductible and have a co-insurance portion once the member meets his deductible. The hybrid plan is not HSA compatible. This plan was designed to allow the member to use basic medical services such as the PCP to prevent expensive procedures in the future. The plan can be summarized as an ounce of prevention is worth a pound of cure. Thank you for watching our series on understanding how to select a health insurance plan. For more information or to get a plan started, contact Payroll Services LLC at 240-699-0060 extension 1001 or visit us at our website at www.payrollservicesllc.com.